Hi, I'm Garth Drinkwater from Small Business CGT Concessions Specialists. In this video, I'm going to talk to you about one of the 4 additional tests for shares in a company or units in a unit trust, that being the Modified Active Asset Test. Particularly, I'm going to talk to you about the relevance of the test, and I'll provide you with details of the test. If you'd like more detail about the other additional tests, they're covered in separate videos. I'll start with the relevance of the test. The Modified Active Asset Test is one of the 4 additional tests that are some of the basic requirements that must be satisfied by an entity to gain access to the Small Business CGT Concessions, where the CGT asset is a share in a company or a unit in a unit trust. If the Modified Active Asset Test applies but is not satisfied, then the Small Business CGT Concessions should not be available. I've just talked about the relevance of the test. I'll now provide you with details of the test. Unfortunately, this test is complicated. For the purpose of this test, where the CGT asset is a share in a company or a unit in a unit trust, we'll refer to the company or unit trust as the object entity. If the object entity holds any direct or indirect interests in other companies or unit trusts, then we'll refer to those other companies or unit trusts as later entities. The Modified Active Asset Test requires that the CGT asset would still satisfy the Active Asset Test if 2 assumptions were made. The first assumption is that financial instruments and cash inherently connected with a relevant business are not taken into account for the benefit of the Active Asset Test if they were required for a purpose that included assisting the CGT asset to satisfy the Active Asset Test. The second assumption is that if the object entity holds any direct or indirect interests in later entities, then those interests themselves are not taken into account for the purpose of the Active Asset Test. Instead, a proportion of each later entity's underlying assets are taken to be assets held by the object entity directly. And that proportion equals the object entity's small business participation percentage in the later entity. However, the underlying assets of a later entity can only be taken to be active assets and therefore benefit the Modified Active Asset Test, where, in broad terms, all of the following 3 requirements are satisfied. Firstly, the later entity's underlying asset would otherwise qualify as an active asset of the later entity. Secondly, the taxpayer would either have a small business participation percentage in the later entity of at least 20% or be a CGT concession stakeholder in the later entity, which broadly requires the taxpayer to be an individual with a 20% interest or the spouse of such an individual. And lastly, the later entity would either be a CGT small business entity at the relevant time or would satisfy the maximum net asset value test at the relevant time if the only CGT assets or annual turnovers considered were those of the later entity, the object entity's affiliates, and each entity controlled by the object entity, assuming the control test percentage were 20% instead of 40%. So that's it for this video. If you would like to know more or get in contact, head on over to our website.